one space which is under a bit of pressure is essentially life insurance companies. I mean, you can look at SBI Life, HDFC Life, ICICI Pru Life. They're all sulking a bit in trade. So yesterday, the government put out the proposal to sort of introduce direct tax reforms in the direct tax code, and the proposals also pertain to taxes that life insurance companies will pay. We've been getting reactions from players like Max Life earlier in the day. Let's now bring in Mr. Arijit Basu, Managing Director and CEO of SBI Life Insurance, who's now joining us. Mr. Basu, thanks very much for your time. Good to have you here.
Thank you.
I trust you've looked at the recommendations. The corporate tax rate recommended.
No, not.
Yeah, go on, sir.
Not in great detail, but I do understand from what you have been mentioning that there could have been some proposal put out. I think similar thing had come in 2011. So as you know that this will be a long process. 6 months time has been given to the committee. They will hear out all the players. But very frankly, if there is any kind of tax reform, all the companies who are there in the market will ultimately adjust to it. And I don't think that this will in the long run have any material impact on the fortunes of the company as such.
Yeah, no, it won't affect growth prospects, but compared to the current tax rate of 14.5%, if say, for example, corporate tax rate, you start paying at 25%, which is what is proposed, I mean, it will have a big one-time impact.
So number one, we need to see how it will be implemented. What is the time frame that will be given, whether it will be a one-time transition or it will happen over a period of time. Having said that, there would be also views heard from the life insurance industry as to why it was kept at a lower level, and when the rates go up, what could be the impact on life insurance sales, or even on the the penetration and because life insurance is a very important mechanism by which social security is given in the country.
Okay.
But so we need to, I think it's too early because still the committee is actually starts working and interacts with industry and various players, including all the players. It's not just private industry, but all the players could be impacted in the long run. And how it will be perceived is something that we will have to see.
Okay. Mr. Basu, hi, morning.
Good morning.
Would it then just be a pass-through to consumers? Would you need to hike your product prices?
No, it's too early to comment. I don't think that necessarily needs to be the the answer if the rates are hiked. That could be one way, because if there is an increase in taxation, it could have an impact on the policy rates. But then again, we would not like to take the policy rates beyond something which gives a reasonable return to the consumer. So again, as I said, unless and until we are able to appreciate, the mechanism or understand when it will happen, if what we submit to the committee is also, considered. So I would think that it is too early to comment at this stage. But I'm sure that whatever will be done, at the end of the day, it will be something which will take care of the fact that ultimately whatever decision that the government takes is not necessarily in the interest of companies, but it is in the interest of policyholders.
Okay, I understand that.
What I'm saying is, if in any way it impacts the ability of companies to give the best deal to the consumer, then I think that view will also be considered before a final decision is taken on this.
Okay, that point is taken, sir.
Right.
Analysts were working with the fact that if in case the tax rate is hiked to a level of around 30-odd%, there could be a 15% impact on your embedded value and even up to a 35% impact on the value of new businesses for the company. Is that a fair assumption? I know the levels would be lower, but...
So again, these are calculations which would require us to go in great depth, see what could be the actual impact and so on and so forth. And I would, recommend that we don't, jump into any kind of understanding or conclusion at this stage. Wait for how things progress. It will be a process which will play out over 6 months before the final decision is given, and I'm sure we'll get opportunities to explain, not only the impact on the companies, but also the impact that this could have on the growth of the industry itself, and how it could impact policyholders and so on and so forth. So I think that should be a better way of looking at this. Yeah.
Okay, Mr. Basu, the other proposal, which is taxing insurance income, do you think, I mean, again, it's possible it may happen, may not happen after consultations, etc.
Correct.
But if it does happen, right now, I mean, the life insurance market and the market within it for pure protection policies is actually quite small as compared to other markets around the world.
Right.
Do you think it could give an impetus for more pure protection type policies and moving away from ULIPs, etc.?
That could be one outcome, as long as the consumer understands the need for buying pure protection. So as you would appreciate, one of the reasons why pure protection has not picked up is not because the companies have not offered it. It is perhaps also due to the fact that in the Indian consumer psyche, the fact that it's basically a protection product is an expense.
Yeah.
You secure your family's future. And the consumer, a large number of consumers feel that what is it for me, and what do I get at the end of the day, after this happens. So that is the genesis of having a savings-linked product, and a combination is something which a consumer understands. And within the various kinds of paradigms that we have, either traditional or ULIP, we try to give some kind of additional savings. So now, in case protection does not pick up, pure protection does not pick up as a consequence of any change in the tax rate, and our ability to sell, savings-linked insurance products also gets impacted, then again, it may not be in the ultimate consumer's interest. So I think all these things will be considered. So the regulator also is working on a vision where we want to take insurance penetration to double the levels that they were, say, 1 or 2 years back, by 2020 and 2030. And, so if we are on page and we are able to proceed on those lines, I don't see any impact at all. Because protection policies are not only good for the consumer, it is very good for us also in terms of profitability.
Mr. Basu, thanks very much. Appreciate you joining us. So I think very clear where insurance companies will stand on the matter. And of course, hopeful that before the final rules are drafted, the industry would be given a fair hearing as well. For now, though, it's also basically a function of what stocks have done once they've listed, which is, I mean, a fair bit in many cases, especially for stocks like HDFC Life. And that's the reason why it's taking it on the chin today. A little bit, 379, but it's still, a lot higher than what the company sold stock at not many days back. We will slip into a very quick break, our first on the show. We come back, we discuss what's happening in the commodity space. Manisha Gupta is going to be joining in, and we get some trading strategies from Navneet.